It's about that time of day again. Welcome to your nightly newsletter, boys and girls. My name is Joseph James. It's Wednesday evening, February 18th, 2015. In tonight's newsletter, we get a jam-packed report for you, boys and girls, here this evening. Hope you're ready. Crude oil is extremely bearish after we called that massive reversal off the highs in last night's newsletter. We've got rollover on the mix right now on crude to the 415 contract, and we are looking for more selling opportunities tomorrow on crude oil. But stay patient, though, because we just heard from the API report here in the U.S., and we're most likely going to get some profit taking after that report came out. Stay tuned for more on crude. How about gold? The funny yellow metal gold futures is extremely bearish. We made easy money overnight. And, of course, taking profit today at our $1,200 an ounce target, which we called last night on the newsletter. Now we're trading inside of a range. We're looking for a very important breakout opportunity on gold tomorrow. And it's probably not going in the direction that you might assume. So make sure you stay tuned for more information on gold. And we can't forget about the mighty mini Russell. Boy, those bulls are definitely sinking their teeth into these equity markets right now. Russell is bullish after giving us an easy trade, buying the lows from last night's newsletter. Remember last night? Talked about buying the lows last night at that range. About 10:30 this morning, we got exactly that. Well, today, we're back up to those highs again today, and the volume continues to tell us to keep buying those pullbacks and keep buying that support for tomorrow. Guys, we have a jam-packed newsletter for you guys. We went 3 for 3 in last night's newsletter. Before we jump into tonight's newsletter, though, I want to remind you to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. Make sure you're watching the video on our blog at Sideways Markets. There are 3 very good reasons why, if you're watching this video on our YouTube channel right now, follow the link right below the video if you're watching it on our YouTube page, and it will take you right here to this page. There are 3 reasons why I think you're going to find value in watching this video on our trading blog. First, I'm going to give you all the charts that I'm using tonight. You can download all of them and use them tomorrow on your computer. All right? How nice is that? Download all those charts for tonight's newsletter by following that link right below the video. Second thing, I'd like to give you a free pass to come out and test drive our live trade room, right? Sit in here, look over my shoulder, and see how we do things here at School of Trade. If you're not a member of School of Trade and you'd like to get a free pass to come out and attend our live trade room, please register for that free pass in the upper left-hand corner. And, of course, how could I forget? Now you never have to miss another newsletter ever again. No more waiting around. Now I'm going to email you. Register for our nightly newsletter mailing list. All I need is your name and your email address, and I'm going to send you this newsletter in your inbox every evening right about 8 p.m. Eastern Time. So 3 things here on the blog. Download those charts, grab your free pass, and register for our newsletter mailing list. And, of course, don't forget, if you register for the mailing list or if you grab our free pass, I am going to send you a verification email. Make sure when you register with us that you check your junk mail, your spam, right, and anything else that might be doing. And if you happen not to get it, give us a call here in the office, and we'll make sure we figure it out for you. All right? Let's get moving here. We got a bearish crude, a bearish gold, and just a little bullish here on the Russell. Let's put it together. I'm going to start here this evening with that mighty mini Russell. Boy, this Russell has been really making it easy on us here this week. If you recall, in last night's newsletter, gave you guys that buy scenario, buying the low of that range. Wasn't that easy today? I mean, literally, you couldn't have scripted this any easier for all you Russell buyers. The hard part was simply waiting patiently for price to come down. You know what happened, right? The sellers were thinking, oh, baby, we got this thing going all the way back down. And they clearly didn't look left, right? We've got this big, bold trend here right now. What were you thinking selling these highs? What were you thinking up there? Oh, who knows? Who knows? That's all right. Money out of their account and into our accounts. That's the best part about this whole business. So Russell's bullish. The bull channel turns into a sideways range. Okay, we bought the lows of the range this morning on our way higher. And of course, we've got some targets waiting for us, 1231, 1236. We are still bullish. Now, if you missed the buy opportunity today, wait for the breakout, right, and a pullback. So wait for a breakout above the 25.4, a pullback, and then you get a breakout pullback scenario on your hands, and you're going up to that target up at 31.7. Okay, another option, which I would rather have, would be if price comes back down. I would love to buy this sucker again. So either you're going to break out with a pullback or look for another chance to buy these lows as it drops before it goes back higher. Now, you might notice at the bottom of your screen here, volume continues to confirm. Well, I'll tell you, I looked at this chart the first time and I said, there's no way that volume confirmed. I mean, look at all that volume right there. Oh, no. Oh, don't you doubt the mighty Russell. These buyers, they are here to party. So we can definitely tell those buyers are here. And right into the close today. I mean, what does that tell you? Right? That's a really, really good clue. So bottom line right now is don't even think about buying right here. Okay? We don't buy the highs. You buy the highs, you're giving the money to guys like me. Wait for a breakout. Make some other poor sucker take the high, and then wait to use that resistance as support, right, as it pulls back. Again, the best option will be to buy it as it goes a little bit lower. We'll see what we get here coming out of the overnight session. Moving from the anchor chart to the price action chart, got a lot of the same stuff on this chart. You can see there's not a lot of differences in this one. Bottom line, Russell's bullish, but we can definitely see we're inside of a range. We can see an undershoot right here, if I can get my drawing tool ready, undershoot of the high of that channel, right? See the high of that channel, right? We'll see how the price can't quite get there. Well, we can assume that's because of the high of the range. Okay, so this suggests the highs of this range are a little bit stronger than we maybe have thought. Okay, so wait for a breakout and a pullback. Same scenario as we saw on the last chart. Really, in this scenario right now, you have three options to get long. Want to go over them real quick? Option number one, breakout, pull back, and we're off. Targets to the upside waiting for you. Scenario two, we break out, we fail, we come back, trap. Easy, easy. Price goes to lows. That's the exact same thing we did today, right? So at 10:30 this morning, when price made that break, bought the low and all the way up to the high. And of course, the third scenario, which really would be a great scenario, I don't think, the way that it feels right now, I don't think we're going to get all the way back to this point, but if we happen to be able to make it down, we get a great range expansion support zone down here, and that's perfect for a fade. So basically take this trading range, copy and paste it above, copy and paste it below, right? And that's where you get your targets above and below, right? So since we're in a bullish trend here going into this range, I'm looking to stay long, buy that break back down, and take it right back up. That's the scenario right now in this Russell. Not a lot changing between these different chart types. As you can see here, be aware that trading range is the most important factor in our trading opportunities going into Thursday. I can't believe tomorrow's already Thursday, right? Gotta love those short weeks here. Now, moving from that mighty mini Russell to this funny yellow metal they call gold futures. Now, gold is very bearish. We've made a killing on this market over the past few months. It's inside a trading range. Now, if you remember, I gave you guys, and that should still be there. I'm not sure why that's not there, but there should have been. I must have deleted it by accident. There was a, oh, that's why. That's why, Joe. There we go. That's what I'm looking for. Okay, here's my gold 16. So gold is bearish, but now trading sideways. Now we saw a ton of profit taking at that big round number. So that's where that volume comes from down at those lows. Remember, we called the short last night on gold, and I said specifically use that 1200 as your target. And, well, we're not perfect, but we sure as heck come close here at School of Trade. So we saw profit taking at 1200, Price now trading inside of a symmetrical range. Look closely at this right now. I'll tell you, this gold market, it may be a little bit slippery and sloppy at times, but these humans that are trading this market right now, that is a symmetrical range. Those are the exact same size ranges. Coincidence? No way. Definitely not a coincidence. So we take that range, I copy and paste it down. It just so happens to line up perfectly. And of course, human beings are creatures of habit. We love to do things over and over again. It's in our blood. We can't help it. We can't help it. So right now, this downward trend on the gold tells me to keep selling. So I'm going to sell the range highs. I'm selling all of the resistance areas overhead. Now, you might be seeing the same thing that I'm seeing. Megaphone. Didn't we just say these megaphones are rare? I'll tell you, we don't see these very often, like I said yesterday, but boy, oh boy, this year has been the year of the megaphone, right? I mean, literally it has. And remember, megaphones, they bring us extreme volatility. Okay, that's why my voice gets a little bit pitchy, right, when I see the megaphone, because it gets me excited. Look what we've seen on Crude the past few days. Megaphone on Crude earlier this month. Here we have a megaphone on gold. Megaphones on any market are really exciting because we're going to sell the highs and go all the way back to the lows, right? So a megaphone is really nice because follow the trend, right? Don't buy the lows. Keep selling the high of the megaphone. And even though the ultimate target is the low of the megaphone, you got to keep using that 1200, right? So keep using that 1200 as your target. We're going to keep doing this over and over again. Every few weeks, we go back to 1200. We try to get away from it. We sell it back down. If you recall, we did this too many times to count at the end of last year, right? Remember, we were stuck around 1200. So no surprise here, but this megaphone definitely tells me, though, don't be surprised if price keeps going higher. In fact, if I had to guess right now, I would say be ready to sell around that 1216.4, 1217 area, because again, that's the high of the range, right? It's not a verified high yet, but we can kind of put two and two together here. Once I saw that this was the same size as this move down, I was like, all right, well, this is going to be easy. So this is going to go probably up to the high, and then we'll sell it right back down to that 1200. I would definitely be patient right now on gold right now, okay? I'm telling you right now, be patient. All that profit taking at 1200. This was not selling volume, guys. This was short covering volume, right? This was buyer volume. Okay, that's why price jumped so quickly off that 1200. You know there are going to be some buyers in the market right now taking some some sellers taking profit. Most importantly, though, there are going to be some rookies out there that don't know how to read this trend correctly, and they're going to buy this pullback to that moving average. I would wait to get a little bit higher before really sinking my teeth into this short here right now. But if it falls apart, right, if it falls apart before going higher, you know where we're going. We're going to 1200, so be aware of that on the gold. And then wrapping up here on the gold, this was the chart that I started with. I meant to bring it second here. On our price action chart of gold, this is in my opinion, this is a much more accurate look here right now as far as where your real tradable opportunities are going to be right now. So the key component here is that trading range. But look, we've got this downward trending channel. Remember, this is really important. A trading range is a very big clue, but the direction we're moving before the trading range, that tells us what direction to stay with, right? Until it fails, right? Until we start making another trend higher. So we're going to keep selling these highs here right now. We're going to keep selling range highs right now. And you'll notice that we go into this trading range, right? So the trading range is pretty easy to see. You had to get a little bit creative there with this one, but you can kind of tell that's our range. You could possibly tighten the range up somewhere like that, right? It's not going to make a difference. Let's put it that way. It makes no difference. So ultimately, we have, like with all ranges, we have three opportunities here. Opportunity one would be a trap. Now look at this candle right there. Look at this. What a great example right there. This candlestick, this is a 1400 tick chart. Look at that candle. Big wick, small body. that's just screaming trap. That reeks of a trap, right? I can smell that trap down the street. So what I'm looking for is I'm looking for that candle to close red. Capiche? Makes sense? Deal? Okay. So I don't want a green candle. I want to see a red candle close back inside. But the key here, though, is, guys, don't forget, the key is I want, for a good trap, I want to give those buyers just enough rope to hang themselves and then close back inside, and whoops-a-daisy, we go back to 1,200. Option number one, trap. Option number two, we do break out and we fade. Now remember, the key to a good fade is for it to go quick. So if we see this thing just jump here overnight, I mean, I'm talking fast. You couldn't even catch up to it, right, with a sports car. So it's going to jump up to that trading range. Remember, when you look for a fade, the easiest giveaway for a fade is it's going to happen fast. Okay, I always talk to my brothers about. My family's all in the trading industry, and a couple of my brothers are pretty good proprietary traders. And one of them always describes it as, I remember, he says, I know I've got a great trap when I'm almost scared to take that trade. Right? When it feels like I'm stepping in front of a freight train, that's when I've got a good trap on it. So I want to see it jump up, get into this range, and then whoop, we fall right back down and sell it. And if it keeps going, okay, because that may happen, right? We may not just get a reversal out of that 1220. But if it keeps going, check it out. We get a range expansion target all the way up top here. So get a nice range expansion target, and the range expansion target is very easy. You just take the range here, copy and paste it, push it up. Pretty simple, right? In fact, it's so simple that you probably think it's too simple. Yeah, funny how that works though, right? Keep it simple. Works the best. Okay, so if it feels like you're walking in front of a freight train as this thing pushes higher, you know you've got yourself looking good for a good fade. Okay, look for the trap at the highs to sell the highs, sell in the 1220, sell in the 1227. That's all we got to do here right now, guys. If it happens to collapse and if you miss that trap, right, selling retracements, using that 1200 as your target. And as we speak, it looks like this trap may be getting ready to trigger here right now as they're waking up in Asia. Okay, that's our gold here for today. Bearish on gold, bullish on Russell. And then how about that crude? Wrapping up here with the Texas tea, the black gold, the crude oil futures, the light sweet crude. Just a wee bit bearish. Just a wee bit bearish. Now, let me just remind you guys, the last time we saw each other, we were all the way back up here. Yeah, no big deal. No big deal. While everybody else was calling the bull run here up to 55 here last night, I think I was the only person on the planet. I was definitely the only person on StockTwits last night talking about going short. I didn't have a chance to look over anything else. But while the rest of the world here was thinking bulls were here, we were ready for this collapse. It was relatively easy. We called this massive collapse off the highs last night, and now we've got this thing well oversold right now. I do have one more target to the downside at 50.29. If you look at the bouncing ball here coming off these highs, right? So we get a nice big fat target there at 50.29. If I had it my way, though, I'd say we probably end up at $50 a barrel here before the end of the week. And that only means 2 more days. So $50 a barrel looks pretty tasty right about now. Remember, that $50 a barrel, it comes in a very close second place to that big round number of $100 a barrel, right? $100 a barrel, $50 a barrel, $75 a barrel, dare I say $25 a barrel. We could only fantasize. We could only fantasize. However, though, whoever thought this price was going to 60 this week here, and it definitely looked like it early this week, right? But if you look at the chart, though, the chart didn't lie. We nailed it last night. Now the hardest part, to be honest with you here for tomorrow, is that we've got, well, in my opinion, there's a triple threat going into tomorrow for crude oil. The first thing is this oversold? And I don't like to use the term oversold, but, you know, we're making new lows. I have a very hard time being a seller right now. So be careful being a seller right now, I would assume. And of course, I'm going to wait for confirmation like everybody else out there. But usually when we get a big day like this today, we'll get some profit taking. right? So I'm definitely looking for price to go a little bit higher here before we take it lower. Maybe I'll be wrong. Who knows? Who cares? But the reality is that I've got some easy selling opportunities waiting for us to the upside if we do get that profit taking, if we do get that bargain hunting. That's the first thing. The second thing is you might notice I'm trading the 415 contract. So right now we are what I always call sharing volume. So it's going to be a little bit lower volume over the next 24 hours as this market moves from the 315 to the 415. Okay, then you throw in that self-fulfilling prophecy, people sit on hands. That's the second threat. And then we have the third aspect of tomorrow, which usually is on a Wednesday, but that would be inventories tomorrow. We just heard from the API, and I'll show you the next chart. You'll get a little bit of a chuckle on the next chart. But tomorrow we have that shuffling around of that news for crude oil, right? So tomorrow's an inventory day. It's usually Wednesdays, but when Monday's a holiday, it gets pushed back one full day. So right now we're bearish on crude, but stay patient to wait for selling opportunities at resistance areas overhead. Be very careful selling these lows. If we fall out of bed, you know where we're going. All right. If we just start tumbling, keep selling retracements on the way down. I've got 50.29, $50 a barrel. I'm just telling you right now, though, the best money's made when we sell after a retracement. Okay, so stay patient for that. You've been watching me do that here for years here at School of Trade. Okay, let's finish up here with the price action chart here on crude. And talking about that API number, I'll tell you right now, they need to fire the guy or gal who is doing these numbers for the DOE right now. What is the problem? This afternoon, the day before the crude report on Thursday, we heard from the API number. Okay, it's a leading indicator of tomorrow's report. They're calling for a 3 million barrel build. They just barely missed it. They just barely missed the number by only 10 million barrels. Now, this wouldn't be a big deal, but the last few weeks, we have seen these jokers miss this number by dozens of millions. I'm going, when does somebody say, hey, buddy, I'm sorry, but apparently you're not meant to be projecting these numbers anymore. Yeah, no big deal. We just missed it by 10 million barrels. That's your job, by the way. Right? No big deal. No big deal. So whoever was trying to toke the fear-mongering fires, remember that late last week? We heard from OPEC last week again. I'll tell you, OPEC is quickly going up the food chain. It just overtook Maury and right, for jokes on television. They're a joke right now. They're fanning the fear-mongering flame last week, talking about, well, price go to 200. Really? It looks really bullish right now. Incredible. Incredible. We have a lot. Well, and just last week, we heard the largest individual trading firm in the world of crude oil. They came out and said, we still see price going lower. So OPEC is really in trouble right now. They've lost all clout, all respect. I swear people are selling into OPEC now. Complete paradigm shift. It's an exciting time to be a crude trader, I'll tell you that much. We are going to be in a completely different world in about 6 to 9 weeks. Just you wait. Once we get through the third week in March, this party's going to get crazy. I cannot wait. I cannot wait. But a very interesting scenario, though, where we are smashing these multi-year highs on inventories. There is a ton of crude out there in the market right now. We've got big concerns about inflation, whether it be China, whether it be Europe, even in the U.S. We heard from the FOMC meeting minutes this afternoon, and the only thing they said today, the only thing that was even remotely concerning, was that they were worried about deflationary or worried about lack of inflation. They're worried about dropping prices. Guys, I hate to say it right now, but there's absolutely no reason why we don't go to $40 a barrel here in the next few weeks. Okay, they told us, the oil minister of Saudi Arabia told us a few months ago at the end of December that they were prepared for $40 a barrel. Why don't you just wrap that up, put a little bow on it, and we'll just start throwing darts at it? Because $40 a barrel, if this keeps up, right? We saw they gave it a good shot this week. You can tell. They gave it a great shot this week. And we were bullish earlier this week. Late last week, we were bullish. We had some of the biggest runs of the last 10 years on crude the last few weeks. So they definitely gave it a try. They gave it the good old college try, but this is definitely not what those bulls were expecting here. So inventory report says stay bearish. The chart says stay bearish. I mean, you could ask, I'll ask my little brother right now, he doesn't even drive a car. What does he say? Stay bearish. It's very, very clear right now, right? Very, very clear. So stay to the downside right now. You'll notice here, though, we've got this API overshoot, which I've marked in the chart. So the API number comes out, it pushes us through the low of this channel. What you're likely to see, this is under normal conditions, what you're likely to see is an overcorrection. Okay, so be expecting, now, obviously the way it looks right now, look at this thing as it's tumbling right now. The way it looks right now, there ain't any hope for an overcorrection. This is going to go to $50 a barrel overnight, most likely. But the reality is if I'm trying to trade this move, this overshoot, you are going to see some big profit taking. So if you get short right now, just be careful. Be careful. In my opinion, you've already missed the move. Okay, the best opportunity was to sell right up here, which we talked about today in the trade room. Sell right up here when those buyers failed. Now, if I want to keep selling, wait for price to come off those lows and then sell it back down. $50 a barrel will be the target if we don't end up there by the time I finish doing this video. Who knows? So stay patient, sell at resistance, and because this overshoot will overcorrect, stay patient for it, right? Be patient for that price to come back up. Whew! What a busy day. What a great day we've had today. What a fantastic week. Hope you guys see value in the newsletter tonight. Sorry for all the excitement here around crude oil. I'll tell you though, what an exciting time it is to be a trader. What an exciting time it is to be a trader. As somebody who has watched OPEC wreak havoc in our futures markets, in our oil markets for the past 10 years, it's just like, wow, what a difference only a few months make. I'm telling you, we're going to wake up here. We're going to wake up here April, May, June. This is going to be a completely different world. If they even touch interest rates, this is going to be bonkers. And it's great for a day trader. I wouldn't want to be those poor suckers trying to predict long term, but it's great for a day trader right now. If they start tinkering with the language of the Fed regarding interest rates, oh baby, just wait. It is going to be bananas everywhere. I cannot wait. So excited right now. Guys and gals, I got to go cool off a little bit, get some oxygen over here. I want to thank you so much for being here tonight, though. Thank you for participating. Don't forget, before I let you guys go, grab a copy of the charts, grab your free pass, register for the nightly newsletter mailing list. And if you happen to stumble over here to SchoolOfTrade.com, don't forget, we've got the best free trial on the planet. Guys, I've been doing this for over 11 years here at School of Trade. We're the longest running trading education website on the planet, period. Ain't nobody been doing it longer than I have. And I want to prove to you that we're the best. I'll put my money where my mouth is and give you a great free trial. You're going to learn more in my free trial in 1 week than you're going to learn anywhere else on the internet. And if I'm wrong, please tell me, right? I'll prove it to you. Register for that free trial right on the homepage. We got 3 levels of membership here, beginner, intermediate, and advanced. And don't forget, guys, if you ever need any help, I've got somebody standing by. Yeah, that's her right there. No, not exactly her. But somebody who looks like her is standing by to help you guys out 24/7, 365 if you need it. All right, guys. Yours truly, Mr. Cray Cray over here. My name is Joseph. Sorry for the excitement here tonight. As you can tell, right? I get a little amped up here for this stuff. I love this stuff. This is the best business in the world, and I look forward to sharing this opportunity with you guys tomorrow in our trade room. Should we do it again? One more time? Yeah, baby. Let's keep it going. Tomorrow, same time, same place, 8 o'clock Eastern time, back here for my newsletter. My name is Joseph. You guys be well and be nice to each other, right? We'll see you guys then. Adios, amigos. Bye-bye for now.